What's going on, Bullish family? As a friendly reminder, I am not a financial advisor. The ideas presented in this video are personal opinions and for entertainment purposes only. You and only you are responsible for the financial decisions that you make. Thank you. Sit back, grab your notebook, and enjoy today's webinar. Technicals, but Forex Factory pretty much gives me everything I need. And I'm going to show you guys how I read this and how, again, hopefully that you guys can take what I do and be able to work it into your own, trading journey and trading plan as we go through. So as I pull up Forex Factory, right, you guys know that I've already filtered out those yellow folders. Those are low impact news. It really doesn't move the markets in a significant way for me. So I think it's just extra noise when I'm looking at it on Forex Factory. So I don't worry about that. I'll just filter it out. So as the markets open up in the next couple hours, today's a bank holiday for New Zealand in observance for the second New Year's Day. So again, I'm not really big on the New Zealand dollar either way, but just know that today's a holiday, so that might open up a little bit slower. Going into Monday, right? So we got GBP, medium impact. We got a PMI number. Now, I'm going to show you guys what I look at when I click on detail, because if you want to know a little bit more about what this number could mean at 4:30 in the morning for the pound, you can come down here. It tells you what it is, a level of diffusion index based on surveyed purchasing managers in the manufacturing industry, right? I don't really know what that means. I could care and I could look deeper into it, but down here, right, it tells you why traders care. It tells you what the acronym is, Purchasing Managers Index. So basically, just a leading indicator of economic health. So again, why I tell you guys is I don't dive into these details all the time is because all I want to know is at this time, a certain amount of news is coming out for a certain currency. And you just don't want to be blindsided in the markets on a technical side, not knowing that this news number is coming out. Now, if you look over here, it gives you a forecast and an actual, what that number is forecasted and what that number actual was. Now, a lot of the times, whether it's a positive actual or a negative actual, it doesn't really correlate a whole lot, whether it's, it goes buy on the technical side or sell on the technical side. I've, back tested this a little bit myself, and you guys please go back test it yourself too. But again, I don't see a huge correlation when it comes to this. So I really don't worry about the numbers. I just worry about what the major news is. So tomorrow we also have these OPEC meetings going on all day. This is the Organization of Petroleum. So pretty much oil throughout all countries. This is only monthly. So this is kind of a big number. And this is for all currencies as it shows here. So opening up today and tomorrow could be pretty volatile. Little CAD PMI number in the morning. Tuesday, just a USD PMI number. So not really worried about the beginning of the week other than the OPEC meetings. As we go into Wednesday, right, we have, I'm pretty sure that's Epiphany Day. I may be botching that. I'm not sure, but for the euro. So maybe some slower movement on euro pairs on Wednesday. And then also we got the Bank of England Governor Bailey speaking at 9 a.m. for the pound. So during New York session, right, that main New York session, we could see some high volatile movements from the pound. Now, that doesn't mean that the market's going to move quickly right at 9 o'clock because it's a speaking. You guys need to understand, like during these press conferences and stuff, they just like drop little hints. It's certain words that they'll say in the press conference that could swing the price up or down. So it may not happen right at 9. It may happen at 9:10. It may happen at 9:28. So just understand that when you see like speakings, it could happen kind of within whatever time range, 9 to 10 a.m., whatever it may be. Also Wednesday, we got FOMC. This is a big number coming off of the federal funds rate that gets announced pretty much 8 times a year. So again, something FOMC meeting minutes is pretty big. Wednesday afternoon, it's an afternoon number, so that 2 p.m. time. So not that core New York session. So Wednesday is a great day, and you'll notice this too. Sometimes on FOMC days, New York will be slower. So it's like they build up all the liquidity they need in New York to go ahead and move it at 2 p.m. So keep that in mind. And if you haven't heard that before, I would definitely jot that down. Going into Thursday, right? Thursday is probably going to be more of a slower day because as you guys can see on Friday, we have pretty much the biggest day when it comes to fundamentals in the Forex markets. And this is the unemployment rates, or you may hear them called NFP. It's the non-farm employment change. So obviously unemployment numbers and everything this year have been pretty crazy. Now, again, whether it's a positive or negative number, I could really care less. You guys just need to know that, hey, on Friday at 8:30 in the morning, for the Canadian dollar and the US dollar, we're going to see some high impact moves. And I actually want to pull up I'm not going to play the YouTube video, but if you haven't seen this before, this is one of the first videos I actually watched when I first started trading. You should look up Arsalan Jan NFP, right? So you can see how fast the markets move during this New York time. So check this out. Take a screenshot of this quick. I would go watch this video. Arsalan is somebody that I followed along with, my first couple years when I started trading. And this is a really cool video just to show you how quick the market can go from this price to this price and then retrace back into it. So drop a 111 if you've seen this video before. Happy to help. Love doing Zoom trainings. Not a must. Not simple. Cool. Walking through the chat. Couple people seen the video, but yeah, definitely watch this. It helps you kind of understand how fast the NFP can go for you guys. But other than that, that's what we got going on this week. And also, when unemployment numbers are coming out on the end of the week, sometimes the whole beginning of the week could be a little bit slower because, again, what do they like to do? They like to gear up. They like to build up liquidity on maybe both sides of the market before releasing that big news, before making the excuse to move the market. So, the market's building up into Friday is going to be pretty big, and even Wednesday afternoon as well. So this is what I got on the radar for fundamental analysis. This is what I'm going to be looking at. Other than this, I pretty much go straight to my technical side because you guys know that, most of our trading isn't based on fundamentals or certain indicators and certain things that in the other. We really like to dive into what price action is actually telling us at that exact time and at that exact price. So that's it for fundamentals. Any questions on Forex Factory before I dive into Wyckoff a little bit? Any group, happy to help, very active. Zoom trainings. My man Ted are going to be in the chat all day. I love it. Waiting for Wyckoff. Let's see. All right, cool. So again, I'm not going to do a whole lot of Wyckoff explanation. Again, you guys can go. This is one of the best websites. It's school.stockcharts.com. All right. And it goes over who Richard Wyckoff was, right? He's pretty much considered one of the 5 titans of technical analysis. You might recognize some of these other names, along with Dow and Gann and Elliott as in Elliott Wave, Merrill as in Merrill Lynch, Dow as in Dow Jones, right? So, he's somebody that, is one of those titans, is one of those fathers to technical analysis. And this is where a lot of our training comes from, right? It comes from this exact approach. And the main reason why I'm pulling this up is I'm not going to read this for you guys. Again, I gave you the website. You can go look at it. But pretty much this price cycle that we're following here is, again, when the market's at a low point. And, again, there's indicators and stuff that show this as well. But this is a broad overview, right? When the market's low, it's oversold. So that's where accumulation comes in. And then they mark up. And then at some point, the market's overbought. This is where we get that distribution from. And then we get that mark down. So, he goes a little bit more in depth for what this price cycle actually looks like when it comes to kind of candlesticks and how you could properly enter and exit the markets. So as I scroll down a little bit, right, we're going to go through all this. There's pretty much 4 main schematics that you guys need to know. And, it's really only 2 because 2 and 2 are kind of the same thing. You have 2 accumulation schematics and 2 distribution schematics. So this is the main accumulation schematic number 1. Okay. And I'm going to kind of walk you guys through this super quickly. So obviously the market is in a markdown, right? The market's falling. We hit a selling climax. So we hit some kind of low. We don't know what that low is. We just let the market hit some kind of selling climax. Now, after we hit a selling climax, obviously the market can't drop forever. So we have to have some kind of reaction. This is called an automatic reaction because it has to happen. It can't just fall forever. So in phase A, you have a selling climax, automatic reaction, and then a secondary test. So this kind of gives you that point of, hey, we just made a new low in the markets. Perfect. Now, when could we be looking to go ahead and maybe, position ourselves into a buy position? Well, you have to wait for a whole nother phase to go through before you actually enter the markets, right? So let the selling climax hit in phase A. Now, somebody tell me what's going on here in phase B, right? In phase B, what are they doing? They're creating equal highs, they're creating equal lows, they're creating equal highs, they're creating equal lows. So you could give phase B, pretty much a couple different names. Let me check in the chat. I'm kind of looking for a couple things here. Can you go over reaccumulation? We will. We're going to go over all that. Manipulation. Cool. So I love the word manipulation, right? Consolidation was one of the words that I'm looking for. Love it, right? They're just consolidating. Phase B is a big consolidation, accumulating more liquidity. I'm using the words that you guys are putting in the chat, right? They're accumulating sellers and they're accumulating buyers. So these are all those retailers, right? These are retailers buying double bottoms. These are retailers selling double tops, right? M's, W's, whatever it may be. You know, there may be harmonic patterns in here. There's, you know, certain trend lines going on in here. You know, there's certain indicators that are saying, hey, this market's way too oversold. This market's way too overbought. So this is the evidence that you guys want to see. It's amazing. I love it when the market's in consolidation because I know we're in a phase B. I know that at some point when the institutions are ready to break out of that you know, break out of that consolidation, we're going to get phase C. And phase C is where we get that spring or that UTAD. And UTAD is with distribution. But again, after they build up enough liquidity, and there's no telling when they, and there's no telling when they have enough liquidity built up, right? It could be a couple hours, it could take a couple days, it could take a couple weeks, depending on what time frame you're looking at. But you let them build up liquidity. Then in phase C, what they're going to do is they're going to spring an accumulation to the low side, take out all those early buyers, right? Because buyers are here. What are they doing? They're putting their stop losses up under here. Breakout traders are putting sell stops up under here. They go ahead and tag all those traders, spring low. You want to see that evidence of them trade back above that old support line. And then one of the best entries that we can get on a Wyckoff schematic is this test. And then we get the mark up through phase D. So that's pretty much, you know, one of the, you know, simplest explanations that I can show you for, you know, accumulation schematic number one. You get the mark down. You're going to have the consolidation phase B. You want to see spring, trade above, test, and then we can go ahead and position ourselves in the markup as needed. Now, there's accumulation schematic number one, and then there's accumulation schematic number two. Now, the only difference here, phase A is the same, phase B is the same. The only difference here is phase C. Sometimes, and I said this on one of the other overviews that we did, every schematic is not going to be the same, right? Everything is not going to look identical. So in schematic number two, you're not going to get that spring low. You're pretty much going to get what they call is an LPS, and is a last point of support, right? They're going to get a last point of support here, whereas this secondary test kind of worked as that spring, and they're going to go ahead and continue that markup. So, you know, you guys aren't always going to get that spring low of liquidity because sometimes, right? Sometimes they may have already pulled out all the buyers that they need, right? There's no telling. We just have to read price and wait to react on that. So here in this type of schematic number two, hopefully, you know, we'll be able to find some way to position ourselves here in phase C and phase D, moving back to the upside. So should there be a special candle in the spring to consider as a hunt? For example, a wick? Absolutely. That's exactly what you want to look for. You want to look for a big candle that maybe leaves a long wick, or, you know, something that it shows evidence of it taking liquidity over to the left side. Just follow the structure. Perfect. Cool. Love it. And again, like, I don't mind you guys asking questions. I'm going to go through back and forth, but this is what you need to know. Schematic number one has a spring. Schematic number two isn't going to have the spring. Now, it's literally the same exact thing for distribution. So as we go into distribution number one, right, you're going to have a markup in phase A. You're going to have a buyer's climax, automatic reaction, secondary test. We're going to consolidate to create the buyers, create the sellers. And then what we call a spring on accumulation is called a UTAD, or up thrust after distribution, right? This is them distributing all this money in between here. Up thrust after distribution, they trade below, they retest those lines, and then we get that mark down. So again, same thing here with distribution to the upside. And then obviously schematic number two is just not going to have that UTAD. It's just going to have a lower point of support structure, and you're going to be able to fall down through that. So, you know, again, I'm always getting questions on more Wyckoff stuff. I know I don't have a lot of Wyckoff stuff on my exact YouTube. There's other YouTubes out there, you know, that you guys can follow along with. They go deeper into that, and I'll make some more videos coming up. That's pretty much all of it. Go through how to use volume indicator. I'm not going to go through the volume indicator. I actually watched a video. Shout out to one of these guys. His YouTube's Ment FX. He's commented on some of my stuff before, but he actually just posted a Bitcoin volume video yesterday, which is really, really cool. So I'm not personally going to go over any volume stuff. I see a lot of smart money traders use the volume. Again, I personally just don't. What do you see on the chart to identify the beginning of a schematic? We'll kind of go over that. You want to look for that consolidation area, those equal highs, equal lows. Again, you want to look for what other retail traders are trying to, what other retail traders are trying to participate in, right? When they're trying to get into the markets, when you see double tops and double bottoms, as a newer trader, you're like, oh my gosh, that's a perfect sell. Oh my gosh, that's a perfect buy. But as smart money traders, we know that they're just creating those equal levels. How to get that sniper entry. Let's look at a chart. Yep, we'll go into some examples now. So cool. That's what I really wanted to go over for Wyckoff. That's pretty much what we got there. I think I've pretty much answered every single question. So we'll go ahead and dive into some charts for the next 40 minutes. And again, you guys can come check out this website. Very, very informational here. But let's get into it. So we'll start off with the dollar index, and I'll ask for questions as we kind of go through his stuff. As you guys know, we're going to go through the dollar index, GU, UCAD, and then I'll kind of go over some of your guys' pairs that you want to see. Beautiful, beautiful, beautiful. We still got everybody tuning in. Awesome. All right. So dollar index, and it's kind of funny because at this point, now that we've been together for 3 to 4 weeks on Sunday, I don't have to change a lot of the markups that I have. Again, like everything is still, we're going to abide by the same rules that we had last week, right? Especially if those prices weren't touched. I don't have to go back test and spend time anymore showing you guys where my major areas are, because you should already have them on your charts as well, right? If you take what I have here, take a screenshot of this, take a picture of it, pause it while you're watching the recording of the video, go put the same exact markers on your chart. You're just waiting for the market to reach that point of area. So, again, all price action to the left of this candle, we got no price action to the left of here to look at until I back tested all the way back into whatever time it was. And this is the main area that I'm looking at to the downside, right? This 89.35 to 89.10 range. We have a 4-hour imbalance lying right here. You could look at that 89.20 level. So this is kind of my main target to the downside, right? We're bearish on the dollar. And, again, if you haven't tuned in yet, our overall, bias when it comes to market structure, when it comes to trend analysis, right? For the dollar index, we are bearish. We have beautiful distribution here, right? We've been trading lower. So this is where we're at right now on a higher time frame. We are bearish. We haven't changed that bias for months, right? Especially since we just passed, right, the new stimulus bill. What are they doing? They're printing more billions of dollars, right? The more money they print, the less value that the dollar is. So that's pretty much what's been going on here. So really looking for continued bearishness on this dollar. Looking to, hopefully maybe trade into these prices this week, somewhere down in here. And now I have pointed out, right, if we do see some upside momentum, what could we look at? Now, last week we were looking here, and this is kind of where the market found its, highest point and then sold off a little bit. And then we obviously have this 1 hour 50% marked up here. Now we did leave a new gap area from last week's price action. So who knows, maybe we trade back up into this to start the week, right? See more continued bullishness and then trade lower. But we're kind of going to go down into the hour time frame real quick to kind of see what prices we could really be looking at for this dollar to go. Because as you guys can see, we saw some great bullishness to end off last week. So who knows, maybe the start of this week, we could continue to see more bullishness. So here's that 1 hour, right? And you guys kind of want, an example of Wyckoff, right? Check this out. All week, right? This entire week, we trade lower, we trade lower, we trade lower. This is where everybody was able to enter into sell positions, right? And again, they're going to let the retailers win sometimes, right? Sell, 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 sell. Beautiful. Now, what happens when the market opens? What are they going to do? They're going to run a candle, a wick, institutional, right through whatever big pool of sellers, whatever big pool of liquidity, whatever big pool of money they have. So that's exactly what happened here. In one swoop, they went ahead and stopped out all of these sellers over here, whether they took profits or not. That's what this candle does. So we've left pretty much the 50% of this candle open. We did pretty much play off the open of it there, which we've already talked about in the past. But, looking more to this week's price action, again, what did we leave down here? This isn't, right? What does this look like to you guys? This isn't a beautiful distribution schematic, right? It didn't do one of the leave liquidity, spring, and then trade above, right? What did it do? It just left liquidity and traded above, right? It's more of that schematic number 2 type thing here. So overall, this equal low, right? This double bottom that, again, I'm sure that some people made money off this double bottom last week, which is fine. That's awesome. I'm glad that, sometimes people are able to take advantage of that. But to me, I see this as an equal pool of money, an equal pool of liquidity. So I see this as a target, right? They're just leaving this for a later time to come snag. Check the chat real quick. The daily price action, which you are playing off from 2018, is perfect. Wyckoff, it is. We've already went over that in other webinars. Glad you have been able to notice that. Ross, would have they put billions of dollars to push the price? Would they have put? So, again, I can't say like what amount of money, but they definitely pushed money into the market to, see this up thrust that we've seen here. Cool, perfect. So yeah, again, we've seen nice, bullish price action to end off last week. So, as I look at the market right now, yes, this is liquidity. So I'm obviously, biased to the downside, but with this bullish action, they could possibly want to come play back up into this, gapage up here. And what do you guys see around here? 92.20. So we got a 20 level hanging out. So again, just like I tell you guys on most Sundays, I want to wait for the market to open. Either we could probably get, just small trickles back up here. And then maybe you see that, this is where I talk about redistribution, reaccumulation. In a major area, you want to see them make that double top and then you tad above, right? And then go trade below and maybe we'll come trade down there. Or, right, maybe the market opens and they come fill in a little bit of the imbalance that we left here on the dollar index, right? Because we've left a little bit of gapage here. So maybe they come trade. Let me grab my brush, right? Maybe they come trade a little bit into this imbalance, right? Create some equal lows. Maybe they got to trade lower and then they come higher and then they come lower. Again, like there's no telling. And I'm not going to sit here and try to predict where the market's going to go. I'm just going to wait till, hey, if they come trade down in here, maybe we can get some nice buy positions on the dollar to start the week. If we start trading higher, I'm going to wait for those major sell positions to bring the market down here. But overall, I'm bearish. So I don't really want to be looking for those buy positions unless that's pretty much what the market's telling me to start the week. So again, like that's why you're just always kind of, getting new. There's a new candle, right? There's a new candle printed every single second. So you're just always kind of updating your analysis as you go through. You can see how much money each candlestick has on TradingView in the left corner, top left, corrective moves. Cool, you guys are just talking it up. Awesome. So, again, so for the dollar this week, really looking for more bearish prices. Obviously, we could see some short-term bullishness, but I'm going to wait for the market to open and kind of see what it shows us here. Now, how is this going to correlate to our other pairs, right? So we obviously know what happened on GU last week. Very beautiful price action. I know a lot of people were able to take advantage of this buy setup, which is beautiful. If you're still holding it, hopefully you have a stop loss in place. If you guys ever hold a trade through the weekends, make sure that you go ahead and put a stop profit in because, even with a stop profit though, they could open up the market below your stop loss and they don't have to respect it, for any reason. They don't have to. So I missed that by a couple pips. Again, my entry was looking at that quarter level. It went to 30. So it kind of just, it was right there. But overall, you guys see, and it's cool. It's awesome if you miss the trade because you can still see the evidence of the institutions moving the market, right? They got close enough to that hour candle to where they didn't need to drop it anymore. And they were able to trade the market back up. So overall, right, we purged this liquidity. right? We're not going to talk about that imbalance anymore. All of this is pretty clean price action. So what I'm going to do, I'm going to go back to the 4-hour, and we're going to talk about some prices for this week quick. Let me delete that because I shouldn't have had it on there, right? So as you look at the 4-hour, we have no price action to the left to base anything off of. So what do we need to go do? We need to look left to get right. We have to go back test to see what went on last time we were at a price of this high, because before this was our highest price. Now we got to go find something that, hey, since we're still bearish on the dollar, since we're still bullish on GBP USD, what is the highest price? Where's the target that I would want to see it move to this week? So what we got to do is we got to go all the way back. And I can't do this on the hour chart because price doesn't let me. And what I'm going to do is actually make this black line a horizontal line. So you guys know that's the highest that the market went last week, right? So now we're going to move left and we're going to go find, which was back in 2018, May of 2018, when the last time the market was this high. And as we see on the 4-hour chart, right, we effectively traded above all of this trend line of money. Right now we're trading into this candle. Now what lies above this candle, right? Our three things. We have a big pool of imbalance, and let me actually grab my imbalance tool here, right? We got an imbalance lying here. What do you guys see lined up with the imbalance? We had that last up push before the down move. So this is pretty much where I'm looking at for the market. So what I want to do is go ahead and mark up the pretty much the open, and maybe the 50% of that last up candle. And this would be my target for this week. And as you guys see, 37.62, 37.55. So I'm going to go ahead and round that to a nice 55 figure. So when it comes to that, that's what I see to the left side of the chart. Now, above this, the market continued to want to run higher. This isn't the cleanest institutional candle here because it didn't really take this liquidity. It was just kind of a short-term drop-off. So overall, there really still is just a bunch of money buildup here. And then as you guys can see above this, we have another imbalance with an even better, last up before down candles. So these are pretty much the targets to the upside. I'm going to kind of leave this imbalance in 37.55 here for us to reference, but that's how I would go look at this to the left side. And I can't go onto the hour chart, so I can't knock that down anymore for you guys. So boom, right? That's what we got. I'm going to look for price to trade above this 37.86 level. Maybe we get short-term rejection around the 50%. Maybe we come trade into that 4-hour last up to down candle around 37.55. But this is going to be my overall target, right? And we're over 100 pips away from this target. So hopefully we can either, position ourselves into a buy position up to here, or if that buy position doesn't show itself, maybe the market trickles up here Monday, Tuesday, Wednesday come around, we get that, midweek reversal, and we're able to take our big time sell positions off of this level, right? So that's what I see to the downside. What do we see? Or that's what I see to the upside. What do I see to the downside? Again, you want to look for the same exact things. We want to look for areas of imbalance and last down candles. Well, as we look, all these wicks have effectively traded lower, traded lower, traded lower. Boom. I come across our first imbalance here, right? And then as I go down, go down, go down, boom, we come across a second imbalance here, right? So now we've pointed out 2 4-hour imbalances from last week, and this is what I'm going to want to be looking at. No, missed that by a couple pips. Money on each candle. Walking through the chat quick. We will go over GEA. That's a new yearly high. Yes, it is. Lots of imbalances up there. A lot of imbalance. So for entry, would you wait for a Wyckoff distribution on a lower time frame? Absolutely. So what you want to do, and this is where redistribution comes into play. What we want to see is, on a smaller time frame, whether it's a 1 hour, 15-minute, or you go into smaller time frames, you want to see them slowly trickle up here, do their thing. Maybe they create a little pool of money here and then trade up into the 50% and then sell off. But maybe they trade back up, create another pool of money, and then trade back up and do this. So again, like you just want to see that, that redistribution up there pretty much in that higher time frame area. But again, here's our two big imbalances for this week that I'd be looking at on the 4 hour. Something else really cool, when it comes to the Fibonacci work, and I know a lot of people have been asking for a new video on the Fibonacci, and I'll get to it, I promise. But if we were to take a fib from market low from last week to market high from this week, right? Before we get into kind of any of the other, confirmations, what do we know? We like to take trades below the 50%, right? We want to take trades based on a discount. So based on this swing from low to high, look where this imbalance lies. This imbalance lies right at the 50%, not by accident, right? That's literally the middle part of the entire trend. Now, the other cool thing is here is you guys might notice, right? Not only is this an imbalance here on the 4 hour, it also lines up with the 50% of the overall trend. We actually have this last up candle over here, which at the time, right, was actually a last push before the market moved down. So it's kind of like an institutional candle. Think about it. All of these people, right, buy to sell, we traded lower. After this doji formed on the 4 hour, think about how many people were trying to sell and take this market lower off this doji, right? Most people, and this is where the institutions get most people, right? Most people know that this sell off is coming. But what do the institutions, what does smart money like to do before they let most people catch the trade? They like to run the market up, 20, 30, right? They ran the market up about 25, 30 pips before moving the market down. So it's kind of cool that they left this candle here, which pretty much lines up with everything we got over to the left. If we were to mark off the 50%, right, of this candle. So we kind of got a lot of confluence going on right here around this 33, 55 area. So really loving this time, this price. We're going to see, at what time that we reach this price and see kind of what goes on here. If we see that, evidence of equal lows and we trade down into it and see some evidence that we trade above, then yeah, maybe we can catch those buy positions up to the upside. Now, if it doesn't reach this at the right time, we could wait for maybe some lower retracements, right? As you see this 61, 70%. And that's where it lies with this other imbalance. Now, the last thing I want to talk about with the Fibonacci real quick is I only have one negative level for an expansion level, and it's the negative 0.27. And it's just, ironic to me, or, just like, ironic to most people, not to me, that this lines up perfectly with that 37.55 area, right? It's not like I made that happen. Watch, swing low to swing high. This first, profit taking expansion level that other people teach on Fibonacci's literally lines up with market price back from 2018, right? So I think 37.55 is an amazing price that we can keep our eyes on this week. Or, if it doesn't hit it this week, this is going to be a price that's going to have, a lot to tell us when we reach it. So that's what I'm pretty much looking at for GU on the 4 hour. Other than that, we would go into the hour time frame and just see how those overall imbalances kind of match up. Because again, we're bullish on this, right? We don't want to be looking for sell positions, but if we were to get some kind of retracement, where could we be buying? As you see, we still got no major imbalances on the hour, so I would still wait for here. No major imbalances within here, but both of them line up with a 4 hour imbalance. So I'd pretty much be waiting for us to trade lower down into here. And then we just want to wait to see what kind of time it is. This is more of a riskier one here because again, like think about it. If you were to try to enter a buy position here, right? Maybe you're going for the highs. There's really no telling where you would want to put your stop. If you put your stop down here, that's a 36 pip stop. Let's see if that would even be a 3-to-1. So it is. It's about a 5-to-1 ratio here if you're looking at something like this. But, what if, you were to wait and we were to maybe come down into wait for this imbalance to hit, right? Now you could have a stop, maybe up under these candles. Now you're only using maybe a 25 pip stop and you could be targeting kind of the same things here. So, again, it just kind of depends on what type of trader you are. Again, if we're looking at, maybe some kind of entry within this hour imbalance, there's really not a better candle to use a stop loss up under. Again, this is kind of a high entry here. So I'd wait for them to trade through this imbalance, and then I'd maybe be looking at these candles here to where now, maybe an entry comes around, 35.50. So again, still kind of right there. We'll just keep it at 45, and stops up under. And again, like if you don't like the fact that I'll take an L here, like because again, if I enter in this imbalance in this institutional candle to the downside, which again you guys can see lower time frame imbalance as well, right? Which the open of this, look at this, the open of this last down candle lines up with the 50% of this imbalance. So these are the extra confirmations that you guys want to see, right? So I'll take this, right? Off of 45, risking 28, right? So again, boom, right? Risking 17 points. What do you want to target? Something up here. Again, either way, it's going to be a 2-to-1 ratio, no matter kind of what you're looking at there. Now, if it happens to stop me out because maybe I entered it at the wrong time or whatnot, cool. I'll take the 17, 20 pip loss, and we'll wait for that second area of imbalance to get touched down here. Does that make sense to everybody? If you guys are following along with what I just showed on GU, go ahead and drop a 111 for me. Actually, hold off on the ones. Let me look at the chat. Hold up. Closer as a candle. I lose interest in Wyckoff because you always need to go lower time frames. You don't need to go lower time frames. Again, if you want to use a 30, 40, 50 pip stop, do it on the hour and the 4 hour. It just depends on, what type of trade. If you want to use that 35 pip stop on the hour time frame, then use it. But if you don't want to use a 35 pip stop, then that's when you got to figure out what type of trader you are, and that's when you go into smaller time frames. UJ, that's why it's better on higher time frames. You can still trade on a higher time frame, break a structure. If you swing trade, when they redistribute near an imbalance, should I look for them to mitigate at a candle or just the imbalance? Normally, in an imbalance, you're not going to have those major mitigation candles. They're going to be above them. Do you trade full-time? Yeah, I trade full-time. Colton, please look at EJ. Everyone's loving EJ. Weekly is hitting an institutional candle, so would it go for a while or down? Still gap at 127. So we'll look at 127. Would you take that if it's not during your normal trading hours? Absolutely not. I'm only trading in my trading hours. That's the biggest thing too. Like the markets can show themselves and redistribute and reaccumulate. But if it's not in my time, I'm not going to take it because I know that's not when the big players are in. Are the big whales in the market, awake, it's trading the market at 9 p.m. Eastern? No, they're sleeping. They're with their families. Fractal nature of the market allows, exactly, the fractal nature of the market allows it to happen on all time frames. Cool. You guys are pretty much answering your questions down there. So those are my two major areas that I'd be looking at for GU for the most part. Just waiting to see if we could have some, corrective to continue some bullishness. Somebody mentioned the weekly candles. I'll take a peek at it quick. So yeah, I mean, when it comes to this weekly candle, right, we're trading above, all this money that we had here. But again, we just got major imbalance over here on the left side. So I'm still, again, like I'm bullish on this. You know what I mean? But I'm going to stop there for GU. That's pretty much what I see there. We'll go over to UCAD. Again, kind of the same things that we got going on. Obviously, we had these nice areas that we were able to take on last week. When it comes to a 4-hour chart, right, we had this nice 4-hour bullish candle here, which could act on a smaller time frame, right? This looks like a really nice sweep of liquidity, right? Long wick down, and then we traded above. So again, if we continue to see that bullish dollar this week, maybe we trickle down a little bit more in here, and then we trade higher. So that's something that we could be on the lookout for. That's kind of what the 4-hour chart is showing us. Other than that, there's really, these are kind of equal lows here, and there's really no major imbalances. So either I would want the market to go lower, or we would look for maybe some opportunities for buy positions here. And then when it comes to the 4-hour, I really don't see any major imbalances that would work in our favor yet. So we're going to go ahead and knock down to the hour. What is your trading hours? I have a beautiful video on that. Again, just main London, main New York, 2 to 5 a.m., 8 to 11 a.m. Yeah, so looking for a buy on 15-minute. I would agree as we knock down. He has trading views on trading hours, Peter. Yep, absolutely. Can you please check the weekly dollar index? It's kind of reaching an institutional candle, so dollar should go up for a while, right? Um, yeah, I'll peep it real quick. But again, like I'm not going to be bullish on the dollar index. I'm sorry. I don't care. I don't really care what it's saying. Right, again, like this week could be bullish. Like I'm not saying that this week won't be bullish, right? What do we, what do you see, right? Last week's candle, it closed as a bearish candle and it had this wick all the way down here. So obviously, right, we were able to fill whatever stuff might be up over here, but overall, I I'm bearish on it. There's just not I'm not going to change my bias on that. All right, let's dive into UCAD quick, and then we can go over more of the pairs you guys maybe want to see. So again, I see, possibly some beautiful buy setups here on USD CAD. So late last week, right, we were able to trade and pretty much equal out kind of some stuff over here. As you see, some nice buy to sell to buy action here. So we found a nice support. We obviously got that evidence of trading back above. So this is kind of that reaccumulation stuff that you want to look for. So now what could we be waiting for, right? Now, beautiful. Let me pull this out, right? We have all this consolidation, right? This is that phase B consolidation area stuff. Let me send this to the back. Phase B consolidation. And I gotta change colors. Cool. And then what happens? What do they do? They drop a candle below it, right? That's kind of our institutional order block candle. And then what do? We show evidence of trading above that old consolidation. So this is that break of structure that you want to see, right? This is that break of structure. Cool. So that's that break of structure. So now what could we want to be looking at? Again, there's a couple things pointing towards a bullish dollar to start the week. So if USD CAD wanted to go ahead and drop off a little bit and maybe come trade into this candle, right? Here it is. Mark off your open, and we'll go ahead and make that the blue. Mark off the 50%, right? Mark off where your stop loss would be lying. And now before I pull out the risk to reward, we want to look for some targets. Now, what are some targets possibly? Well, right here with these wicks, right? This is a pool of liquidity. So this could possibly be a area of first scale, right? We have this last up candle here. So this could pause this 50%, might be a second scale, right? And then, no imbalance here, no imbalance here, but we do have some lying up here. So boom, little bit here with that last up candle. So maybe this is kind of like a third scale for us. And then other than that, they didn't really leave anything for us all through this because this was really small price action. So check this out. You go grab your tool. Maybe you enter at the top because you want to take a 22 pip stop, and even running it to this liquidity, that's only a 1.5 to 1. I'd really love to see if they could at least get that 2 to 1. And again, this isn't the craziest setup. Once we do get up here, that would be an initial 3 to 1 ratio, but this is what you want to see. If this happens in a core New York time, or even maybe shows you some evidence during London, you could, possibly go ahead and take advantage of this trade. Now, what would you want to see? You would want to see them create, if they don't create liquidity before hitting these candles, then it may not be the best trade. You want to see them create that liquidity, trade below, right? Maybe trade into that area. Maybe they break that structure again, right? Come test it, and then they take off. Does that make sense for everybody? I feel like everybody could agree that UCAD's looking pretty nice here, right? Gold, please. Very nice setups. I have my alarm set to look for entries. Exactly. Sometimes even at Asian session, I think big players are using algorithms to trade. So yeah, again, there's more than enough money to be made in Asian session too. Can't this setup turn into a distribution as well? Yeah, I mean the market's always making new accumulations nor new distributions. Depends on what time frame you're looking at. How to know when to take it at the top of the 50%. Again, I mean, you need to use that as a scaling purpose. Whereas if we're looking for a buy position on this, again, you just want to see it's always going to be at different times too. That's the thing about it. Like if it reaches your imbalance at the right time, then take the trade. If it, and then, you know, if it reaches at the wrong time, don't take it. But, you know, if it stops you out during the right time, it's probably going to enter that. It's probably just because your directional bias wasn't right, because the market's obviously bullish. You don't want to try to be shorting the market. I could pull out a fib on here quick. Don't we have equal lows? I mean, we do, yeah, like on a higher time frame. Here, let me delete that quick. Right, on a higher time frame, I just kind of showed you, like, we do kind of have some equal lows here. But, you know, again, like, if you want to take that 20 pip risk on this candle, and if the dollar's looking for more continued bullish action, I mean, again, this is higher time frame liquidity, right? This is a lower time frame setup. AU and EU, I do analyze Bitcoin and Ethereum. Looks very cool. I don't trade UCAD, but it could be an awesome setup this week. Do you combine Wyckoff with buy and sell market models as well? I'm not really sure on your question there, brother. But cool. So, you know, again, just to kind of show you guys how I use a fib here too, right? If this is the high, because who knows? Market could open up and just like trade higher, right? It could not do any of this. It could not do any of this, and it could just trade into this price, and then we don't get that buy position. We just wouldn't get it. But what you would want to look for, right? You could take market low. If this is the high that it creates, right? Where does our entry lie? Right at the 61%. So again, beautiful entry on UCAD that I'm seeing here for us. If again it reaches that, maybe New York tomorrow would be nice. Would be nice. What about the 50%? Also, would you consider the open, close, high, low of the day, meaning the ICT power of 3 as a start to every pattern? Would you consider the open, close, high, low of the day? I mean, I always consider the high and low of the day. I'm not sure if you're dissecting like the open, high, low, close of the candle pattern, meaning the Wyckoff pattern. Yeah, I mean, of the candle, you can dissect the candle, you know, however you want, you know, but for entry purposes, I'm just looking at the open and the 50% for the most part. That's pretty much what I'm looking at. December 17th to the left, out of curiosity. December 17th. Okay, so yeah, so again, like you guys are, you know, more people are talking about, you know, what's going on here. So let's go, you know, again on the hour time frame. This doesn't show me a whole lot because again, like I said earlier, you know, this is kind of equal, but it was a little higher, right? It is a higher low than this. But I could go look at this on a smaller time frame and see what's up. You know, again, if the market blows through this entry, it's because it's going to be at, you know, it's not going to be at the right time, to be honest. Like the reason it would blow through that is because it didn't reach it during New York. So if you wanted to wait for a lower risk setup, right, you could come into here. And now, you know, people are pointing out this 15-minute imbalance here, right? So again, you could risk not catching the trade just like with GBP USD. If you don't want to take that other entry, perfect. You don't have to take the entries that I'm looking at. You could wait for something like this, right? You could enter here at 2,700, right? Right at a whole level. You could have a stop loss right up under here at 2788. So you could use a 12 pip stop. Absolutely. You know, there's no saying that the market won't do this, and it definitely could. You know, again, that's where it just comes into. Are you going to be more of the higher time frame trader where you would take maybe this 20 to 25 pip stop, or are you going to wait to see if it kind of dives into some lower prices like this? Hopefully that answered whatever question. Cool. Perfect. But yeah, again, it just depends on what you're looking at, to be honest. Thank you. Cool. All right, let's move on. All right, I never have time for indices, to be honest, but they've just been really bullish. So let me just touch on this real quick. You know, I really thought we were going to get a purge of these two big pools of liquidity to the downside last week. But overall, last week, when the market opens, it purged a little bit of liquidity, traded higher, so it never got it. We created all this. I thought on Friday we might get, you know, some more bearish action here. But again, you just can't be shorting these markets right now. They're bullish. You don't want to be looking at all these, you know, bearish setups. So market traded right above. So who knows? Maybe we kind of create that candle to the upside this week to go ahead and then continue down below these liquidity areas. But again, there's nothing telling you that you should be shorting, these stock markets right now. So boom, 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 boom. Even with the NAS 100, we're trading higher. Golds, I'm going to give you guys the same. I'm going to touch on this for 30 seconds because I still only got the same setup that I have from last week. Everything was slow. We opened up, we traded higher, we consolidated, we literally moved nowhere. The only trading last week on gold, in my opinion, was early on Monday, was all right here. What do I see now? I see just a lot of equal money being made. If we were to trade down here at 1865, I still love this candle. Other than that, I'm bullish on golds. So I don't really have a setup for it. I haven't been trading gold a lot, to be honest. Gold and silver diverging. Anyone know a good? So yeah, I'm glad that you brought up silver, because silver is something too that I've really been looking at as well. Let me go ahead and delete what I got here. And I don't do a whole lot with divergence, especially when it comes to metals, but I would say that I'm definitely a little bit more bullish on silver at the moment, than I am on golds. Because again, as I said, and as I just showed you guys, I kind of want to see golds kind of dip down a little bit. Whereas for silver, we don't really have much of those prices that I would be looking at. There's a little imbalance here, but other than that, I'm pretty bullish on gold. So I would want to continue to see that moving up. For the question on Ethereum and Bitcoin, right now probably isn't the best time. Right now probably isn't the best time to be day trading these because of the volatileness that's been going on in the markets. Right, you just don't know when that bigger pullback's going to be. But again, for higher time frame stuff, again, right, you don't want to be buying or selling really here on a day trading level in Ethereum after it's already had this great big up push. Now, I mean, if it were to come trade, maybe back here or come trade maybe back in here, yeah, I would love to reposition, maybe some buy positions. But, other than that, there's other people that are kind of doing, Wyckoff stuff when it comes to crypto and whatnot. For me personally, I'm just a long-term holder for crypto. So I just haven't really been day trading it as much lately. Boom. Cool. Let's go over some of the other majors for you guys and go from there. So EU, again, this is the same setup from last week. We had that short-term sell setup that we had, but that dollar XRP, yeah, I skipped over XRP. I'm waiting for lower prices for XRP. I mean, there's a lot of people getting in, at these prices. Again, for whether it's big institutions or even smaller traders, and that's why we've seen an influx even from 17 back up to 22. But overall, I've pointed out a couple other prices on the hour and 4 hour inside of here that I would love to buy some more on. I'm really not interested in buying this up on a day trading level at the moment. Let me plug in my computer real quick for this last 15 to 20 minutes of the webinar. I want to walk through some of these other majors and touch on a couple crosses for you guys. Let's check the chat. The brokers that I referenced in my last video do allow you to trade the DXY in S&P. So I'd go check out that video. USD Mexican peso. We could look at it, and we'll look at GJ for sure. So cool. Euro USD, and I'm gonna make these pretty quick. Right, on the 4 hour, obviously we had nice bullish action last week. Again, things are kind of showing maybe some bullish dollar for this week. So who knows, maybe we can move into this area, right? We left a nice pool of liquidity here, looking for some, low risk entries down here around 21.15, 21.10. If we were to look for maybe some kind of sell setup, we would wait for maybe the market to come or trace back into some of this, when it comes to an imbalance area. But I'm going to go down to the hour chart to see if we got anything a little bit cleaner. And as you see, we definitely do. So as you look at this price action now, right, what would we want to wait for? We have imbalance here, right? We showed some nice evidence that even though this isn't the cleanest, right? We did have an up, down move, up, down move, up, down move. So this candle could be something, we could kind of look at, maybe some possible shorting entries here. If that dollar again is looking bullish, again, I base most of my for when I'm trading majors, I base at least half of it off of the dollar index. You're just looking at the 4-hour down. So for day trading, should be good enough. I think I'm just doing that to save time personally for you guys, because if I look at EU and GU and NU on the daily, it's just going to be opposite of what the dollar index is showing me. Daily on the dollar index is bearish. So more than enough, the daily on, Euro, USD, and GU are going to be bullish. So again, like these pairs are bullish, higher time frames. The reason why I'm not going over that is because I know in my mind where those higher time frame bullishes are, or kind of biases. But and again, if you guys kind of follow along with the channel, or even other people, you know what I mean? I mean, everybody's bearish on the dollar. Everybody's bullish on crypto. That's just kind of how it is right now. But again, I would maybe wait for some retracements back up into here. As you see, this 50% lines up here around our half level, 2250. This entry is around 2275. So again, kind of same stuff here. Whether you wait for the quarter level up here and maybe throw a stop up above this candle, right? That's something you could look at, a nice little 12 pip stop. And then as we look left, there's not a whole lot that's catching my eye. We're pretty much about to trade into the open of this last little down candle here. And we've already pretty much filled that little bit of imbalance here. So I wouldn't be interested in buying this at all off of that. As we look more left, we pretty much played the 50% of that down move. This wick retraced back into here. I really got nothing on the hour time frame other than this imbalance. So, maybe other than, possibly taking Euro USD to the downside, I really wouldn't be interested in a trade on this week. I would much rather, kind of pay attention to GU and kind of what else is going on. But, this is possibly something that you could look at for Euro USD. Let's see how AU and NU line up to that. So for AUD USD, right, again, same thing. We never reached kind of this last candle over here that we were looking at for a buy position last week. We just went ahead and traded higher. So right now, with the way price looks, again, this could be another, short-term sell setup that you could be looking for. Maybe you identify, kind of this last, up candle here. We got some imbalance up in here. Maybe you look at the open of that, stop up above the high. And again, I'm just showing you guys, kind of what my eye would go to. Then I would look for take profits up under, maybe this pool of liquidity. So maybe like a TP1 there, right? We got imbalance here, maybe TP2. Then we got major imbalance here, which could act as more of like a TP3 to the downside. So that's really what I'd be looking at for something like AUD USD. Again, kind of showing the similar stuff to Euro USD. NU, again, kind of going to be the same thing as the euro. We were very bullish on it. We never got those lower prices for that buy position last week on the bearish dollar. So now if we continue to see bullish dollar, hopefully we could see some and see how the retracement back up into this imbalance on NU is a lot cleaner than AU. AU doesn't exactly have that clean up to down candle, but NU has that clean up to down candle with imbalance. So, this could be, maybe a better area of entry, if you were to maybe look at something here. And again, I'm not really equaling off my prices or anything. As you can see, this is right there at a 20 level, right? Stop up above here. Just showing you guys overall what you want to look for, right? Proper risk to reward, risking 15. What do you want to trade into, right? Major areas of imbalance, right? That's a profit taking level, right? More areas of, smaller imbalance to the downside, profit taking levels down here. So kind of showing again, bullish dollar on most of these other majors that we're following along with there. We'll go ahead and flip the script on USD JPY, going to look similar to USD CAD, right? We had that bullishness last week to end off last week. I'll check the chat. So the entry, so when I'm showing you guys these, the possible entries are the blue lines, right? And then the stop losses are the red lines, right? Possible entries are the blue lines. Stop losses are the red lines, take profits are the green lines, right? That's kind of how I'm setting up my charts over and over and over again. USD JPY, again, kind of similar target to USD CAD. We got a target up here with liquidity hiding here. We effectively played pretty nicely off the 50% of this last down candle here. So we'll just make that. So we played that off that pretty nicely a couple times. So as long as we were to stay, right, we got a low, we got a higher low, we got a higher low. As long as we make a higher low, right, and where could that higher low come in, right? We have a nice imbalance area where they could come reprice. We got a nice last down candle. So again, who knows, maybe some kind of, setup around the 50% of this candle, stop up underneath here, right? With UJ, we're talking real low, real low on the pips, but, maybe 6 to, 10 pip risk. And what would you want to target? The first thing that I kind of see is this last up to down here, a little bit of imbalance, last up candle, something like that. But again, like this is what all of my analysis comes off of, is just looking for these imbalances, these down candles, and waiting for the market to enter this either in a core London time or a core New York time. Or again, for USD JPY, it could happen during Asian session. Again, I'm just not going to be the one to be there, perfectly, for Asian session for you guys. Cool. UJ, cool. So I've went over all the majors. We'll touch on GJ. So yeah, with GJ, let me pop back to the daily because I haven't traded GJ in a while. And for any newer traders, GJ is a very volatile pair. So it may not be the easiest for you to kind of mark up at first or even trade at first. I would definitely demo it for a little bit. She's definitely got some spaz to her. So as we look at the daily, as you can see, we're kind of in this daily consolidation range. So that's what I noticed first. We did have this nice little up push down move, nothing major there. We're kind of trading near the highs. I do see some possible areas, where we could kind of come maybe test some daily candles, right? We kind of got this here. So we'll knock that down on a smaller time frame. And again, like if you're a swing trader, if you're a day trader, right? What do you see here, right? You see, right? You see accumulation schematics moving to the upside. We see major imbalance, not really major because we did kind of come trade into it almost here, but we got more imbalance, kind of a gap in price up here. So we have targets to the upside, right? We're bullish on GU. We could be bullish on the pound a little bit more here. Where would you want to position yourself in a buy position, right? Maybe you're taking that entry, stop up underneath the low, again, a 200-point risk for 500 pips, right? That's kind of your swing trade entry. But if you're not really looking at that, you would want to knock down the smaller time frames. So that's kind of what I see on the daily for GJ. Let's go down to the 4-hour. I'm just going to look left real quick so again, this is the highest that the market's made, and overall here is a pool of money. So I know that's a target to the upside. Now, again, if you come from the retail world, you may be like, Colton, that's a double top. That's an M pattern. Like, of course, the market's going to sell off down to here. And, you guys could be right. I'm just personally probably not going to take that sell setup. The same thing happened on GU last week. Somebody was telling me, again, Colton, like, I see a beautiful, right, before all of this price action happened, right? I had somebody telling me, Colton, like, this is a beautiful M formation, right? This is a beautiful double top. The market's going to sell off. Cool. That's awesome. Did the market sell off? Yeah, it did, right? But overall, where did the market want to go? It wanted to go above the double top. So it's like, again, I could say one thing and make money. Somebody else could say another thing and make money. That's the best part about it. So again, going back to GJ, 4-hour, kind of see that. Let's look left of this money pool. So we got a really nice something hanging out up here. So let me go ahead and mark off that 50% of the 4-hour candle right there. So we'll mark that off. 142.25 lines up with a quarter level. So that could be a high side target. that we're kind of looking at there, which again, we're about 100 pips away from that at the moment. Other than that, nothing really shows me what I want to see on the 4 hour. So as you look back to the downside, just real small price movement here. We obviously got some imbalance hanging out down here with that overall daily entry that we had here. So that's kind of what I'd be looking at on the 4 hour. Again, still looking bullish on this pair. Now, if the market didn't want to trade all the way lower, can I get your insight on FTMO if it isn't the appropriate time for this question? I understand. Again, I think FTMO is great. I mean, if you need funds to be able to trade in the markets and whatnot, again, it's something that a lot of people are taking advantage of right now. Again, and there's two sides to it. It's the side of, again, if you need the funding and you have seen consistency in your trading and it's something that you think you could do and you believe that, it'll help you in your trading, then perfect. Having a funded account and being able to make a certain percentage on somebody else's money that you get to keep is great. But what I also know from the other half of it, right? Only half people are going to agree with me. The other half are going to disagree. The other half of it is that because you're not trading with your own money, and if you haven't had the chance and the discipline to lose your own money before, you won't really know what it's like to have your own funds in the market and make that profit or make that loss. So again, everybody's a little bit different. I think it just kind of depends on what kind of background you come from and what your goals are, right? If you're a trader, and let me think how I want to put this. You know what I mean? If you've been trading for a couple of years and you already understand the discipline when it comes to losses, then maybe having a 100K account funded for you, wouldn't be a burden on you. But for the newest trader, if they just so happen to like kind of get lucky through their FTMO stuff, and then they get a funded account, they may not really know what it's like to, work up to that type of money. And that's the other thing. A lot of traders before, FTMO funded accounts, you had to work from $500 accounts to make 10 grand. You had to work from $10 accounts to make $1,000. With this, sometimes it's just kind of given. And I'm not saying it's given to you because you obviously got to show consistency in working through the charts. But that's kind of my personal opinion. Have I personally gone through FTMO? I haven't. I personally am just using kind of my own funds to kind of go through my journey. But again, that's me, right? That's me. I have a whole different perspective than a lot of other people. But I know I have so many friends, right? I have so many friends that are going through FTMO right now that, I mean, it's not even funny. Cool. Perfect. So again, on the hour for GJ, I would just, again, everything is showing bullishness. So I would want to continue to see where we could enter buys, and nothing really points out to me. And again, like, this is the other thing, like, institutional trading is boring to some people, right? Because I'm not sitting here giving you guys like, oh, the market opens and then, I'm looking for this in Asian session. Like, no, it's literally boring to some people. People don't want to spend time going through this amount of technical analysis. People don't want to wait for the market to trade up 100 pips or down 100 pips from where it's at to be able to get into a trade, right? But me personally, right, and other people that I know that have done institutional trading, they would rather not see a trade happen Monday, Tuesday, Wednesday, Thursday, and have that beautiful setup on Friday and take that one setup, right? It just kind of depends on what kind of background that you come from. So again, with GJ, I'm still looking at the same exact thing that I was looking at last week. I would love to come trade down into this area and have a 20 to 30 pip risk to maybe run above these. Now, again, that's not to say that we open and I find something on a smaller time frame. You know what I mean? And I still really don't even say anything. But, again, like something like this, like if the market were to open, maybe come trade kind of into here. And, again, you want to take, something like this. We have a 25 pip stop up underneath this low. And then you target these. Again, if you're looking for a trade, then and you want to take that, then I mean, again, that's on you. But me personally, I know that if the institutions really want to buy this price up above, they would probably want to come take a little bit more liquidity to the downside. And again, do I risk missing trades? Absolutely. Double top. On GJ, double top is not eagle, is a sign that price will continue to rise. So yeah, you know, I agree on that, right? So I don't know if you meant to say it is or is equal. I think it is, you know, pretty equal. I know this week kind of goes a little bit above it, but overall, you know, and this is something that I don't really do either. You know, you would go by the body of the candles too. You can go by wicks, you can go by bodies of the candles, you can go by line charts, and I'm not really going to go by the line charts, but even here, it might tell you a different story, right? Here's liquidity and they ran above. So if maybe we see some evidence of they come trade lower and then maybe they come test, right? Maybe that's where we can see that lower price action. And again, I'm not saying that price doesn't sell off. I'm just saying, you know, again, right now, just like every other Sunday, I'm just going to point out the prices and imbalances that I see and pretty much go from there. But for GJ, I don't really see a whole lot going on right now, but I'm bullish. Right? I can give you guys my higher time frame analysis, and that's where most people get caught up. They don't know what to think for their higher time frame analysis, and they try to go into these lower time frames and not know. Whereas, you know, me and what I want to show you guys is that I take that high time frame analysis, and I don't care what the small time frames are doing. I'm just going to wait for that small time frame to show me evidence of what the higher time frame is trying to do for me. What is a good percentage monthly target to get on an account trading these concepts? You know, again, so it's like most of these trades are at least 3-to-1, 4-to-1, 5-to-1 ratios. I mean, and again, like you can always grab a lot of things greater. And the percentage on your account, I mean, really just depends on what you have in it. If you're only risking 1% per trade, you know what I mean? Like if I take like 3 to 5 L's in a week, I stop. You know what I mean? Like I'm not really looking to, you know, lose more than 5% of my account. You know, I'd say maybe 5 to 7% of my account any week. But, you know, again, think about it. If I take 5 out of 10 trades, right? 5 out of 10 trades lose. So I lost 5%. But I did a 3-to-1 ratio on the 5 trades that won. I mean, I'm easily making 15% that week, right? I'm easily making 15% that month. So, you know, for a lot of traders, especially when it comes to, you know, smaller trading accounts, I mean, people are making well over, I would say 20, 25%. And I mean, a lot greater percentages monthly on these concepts. If every trade you take has a good risk or rewards, then does it really matter what percent account risk you're going with? I mean, it always matters what percent account risk you're going with, because it's like I'm not always going to be right. Sometimes I'll take 2 L's before that winning trade. So it's like, what if I over leveraged on that first loss? What if I said, oh wow, like, you know, because again, it's like let me give you an example, because that's a great question. So the question here is, if every trade you take has a good risk or reward, then why does it really matter what percentage account that you're risking with? Well, it matters because if we were to go to something like USD CAD and I were to be all in on this first entry, check this out. So it would go like this. If I were to go all in on this first entry on a 3-to-1 ratio, and let me just pull up what this one would be as well. So say I was so confident in this first entry, right, that I decided to risk 50% of my account, right? And it stopped me out, right? I got stopped out. I had a $10,000 account. I lost $5,000, right? When we come down to this one, if I were to, you know, risk the same, you know, 50%, yeah, I would be back above, you know, what I lost here. It's just not sustainable. Like you guys, like, I don't care what mentor, who you listen to, like nobody's ever going to tell you to risk more than, you know, for a high percent, 3 to 5% on your account on any trade, because you could get into that streak of lose. And what happens when you lose 5 times, risking 20%, your account's going to be gone. So you really need to not, and that's the way you blow your accounts. Like, it's just like, it's not advisable to ever, you know, especially on a day, you know, and day traders are obviously a lot more risky than long-term traders. You know, long-term traders are risking, you know, 0.5% of account, whatever it may be. But it never goes well if you risk more than 3 or 5%. It just doesn't. I don't care how much you know. I don't care how good your risks or rewards are. It just doesn't go well, because once you have that one winning trade that you take your 10 grand to 30 grand, you're going to lose your 30 grand just as easily. And it's like, that's almost a guarantee because these markets will humble you that quickly. I don't know how long you've been trading, my brother, but that's exactly what it is, right? That's true. But if you're a 20 loss streak, would you consider that strategy? I mean, yeah, absolutely. I mean, if you have 20 straight losses, you got to figure out what's going on. You know what I mean? Like, obviously, you're not doing something right. And it may not be the strategy. It might be you, right? Maybe you're not, maybe you're not entering at the right time. Let me go back to what we were talking about, and we're going to end this off in 10 minutes. So, yeah, so GJ, again, I'm bullish. I would just wait to see if I can see some reaccumulation to take it back to the upside. I know some people were talking about GA. As you guys can see, I like this pool of money that's sitting down here, but I mean, it's pretty far away from where we're at right now, about 160 pips. So if you were to want to kind of look at, maybe another, we're pretty bearish. As you guys can see, we're in this consolidation area, and this is why I don't really touch a lot of these crosses, especially where this is at right now. Again, like, look at this choppiness. Like, you just don't want to be in this. So on the 4 hour, you guys can see, obviously, the imbalances that I pointed out. On the hour, right, there is this here, right? And you could be maybe looking at like maybe the 50% of this last little down push. So who knows? Maybe if you want to be bullish on this to, maybe take it up to this imbalance, you could position yourself somewhere up in here, right? With these crosses, you're going to be taking big stops, right? That's a 30 point stop to, maybe run 180 pip and 80 pip thing to the upside. Other than that, I don't really see any gray areas. I'd be looking to position myself in a sell position before we got up to this price. So that's kind of what I'd be looking at for GA. Other than that, I would just kind of let it do its thing. EG, let me look at EJ. I had a couple people ask for EJ. And I know we went over this one last week. And as you guys see, right, the setups from last week, we had initial rejection, right, off of that area that we were looking at. We ended up trading above it. And then obviously we've seen more bearishness come out of that. So let me look at the hour real quick. So we're over, pretty much pretty bullish on this pair. We've been, consolidating pretty much for all of December has been consolidation. We obviously have some big imbalance to the downside, which I really like, right? We have nice imbalance here. We did effectively purge through this liquidity last week as well. So looking like some nice bearishness coming out of EJ right now. So I'll go down to the 4 hour and kind of see what we're looking at. These candles not really telling me a whole lot, right? We traded up, we traded down, we traded back up, we traded back down. See how these effectively, right, are hitting nice areas on the fib. As you take swing high to swing low, we got a 79% retracement. As you take swing high to swing low, we got that 79% retracement. Right now, we can kind of take it from wherever, swing high to swing low, right? Maybe we would wait for something to come dive into that retracement. So just looking to reposition ourselves into a sell position if you're not already in it. As you guys can see, we have quite a bit of liquidity hiding up under here, right? All of this above our imbalance. So that's what we love to see. On a smaller time frame, let's see if we got any candles. So boom, beautiful. So this is what I see, right? Overall, this could be a short-term play here, right? This 50% because it did just pull over this little liquidity here. But overall, I like this a lot better. I like this candle with the imbalance that this shows here. So again, this would kind of be more of a setup that I'd be looking at for EJ, maybe entering off that candle, right? Maybe a nice little 13 pip risk for whatever we kind of want to target. Either way, it's going to be kind of over a 3-to-1 ratio. But I like this distribution right here. I like this to the downside. Let's see how the chat's doing. I'll go back to Euro GBP. Yeah, I'll drop a couple screenshots of my main pairs. I'm not going to drop screenshots of these crosses just because that's what this is. Your midweek update is awesome too. Yeah, I like doing the midweek updates, and I love leaving them. So I'm going to leave, obviously, the makeup on these charts, and I'll drop a midweek update. No, that's good. But I'm definitely going to get out of here in 5 minutes. Can EJ be an accumulation on the 4 hour? It can, and like I said, like on a higher time frame, right? On the daily 4 hour, right? It is pretty bullish, right? We are pretty bullish on it. But you know, as you knock down to smaller time frames, you know, you could be getting short term bearishness. And yes, as this is accumulation, right? So, you know what my man, whoever just asked that in the chat is pointing out, right? You know, is this accumulation? Yeah, because we did kind of have like these equal lows, and we had a candle that dipped below it, right? And then we played off the open of that candle, right? But think about it, like this has been an accumulation that already went for over 100 pips. And overall, I see it more as a consolidation. So again, this could have just been a short-term accumulation to hit this higher time frame distribution. And again, I know that can be super confusing, and you just gotta kind of like keep diving into the concepts. But right now, where I see the bigger pool of money is in this imbalance area, because again, this is all of December. So they built up an entire month of buyers, right? And if they didn't take profits up on, if they didn't take profits up here, they're still holding on for dear life. So what the institutions are probably going to do is, before continuing above higher prices, they're probably going to want to come reprice into here, take out those buyers, scale them out, and then, you know, kind of run the market up from there. Hope that helped a little bit with the question on Euro GBP. EG. And again, as you guys can see, for the stuff that I'm not as familiar with, I'm going to go back into the higher time frames versus like GU and UCAD, which I kind of know where market's at. Damn. Well, the biggest, again, like the biggest imbalance that I see on the daily is everything happening up over here. So this is obviously the big imbalance that catches my eye. You know, we obviously have a huge trend line of traders going on here. So that can kind of be something that, you know, kind of they're attacking right now. As you see, I see some really nice distribution that's happened to the downside, right? This is really nice, small time frame distribution. And then we see that they obviously played pretty nicely, not only off of this last up candle, right? In that last up candle, they created another double top, you know, pushed another candles up through, more distribution off of those, right? Kind of threw some more wicks up above that to tag a little bit higher. So overall, looking bearish on the higher time frame. I see a lot more bearish targets than I do bullish targets. Now, as we come to the 4 hour, I'm not going to look anything to the left of this trend line. I'm not really worried about it because, again, like this is still pretty far away from where we're at now, right? We're still talking 100 pips away. So as we kind of look at to where price action is from here, and I'm going to go ahead and mark off this whole price of 8,900. So 8,900 would kind of be a target for me. Boom. As we look to the upside, real nice. Looks like we tagged the 50% of this pretty nicely. Not only the 50% of this up candle, but the open of that down candle. We traded lower. And then what did we do again? We had that last up candle, and we pretty much tagged the wick of it to trade lower here. So again, looking for lower prices. We just traded below these lows. You know, I would really, there's nothing really showing evidence here. Let me knock down to the hour. And again, on a you know, a smaller time frame analysis, I'm not going to go lower than the hour. Let's see what price looks like up under here. So price pretty much found support here. There's really no imbalance lying here. They already effectively, right? So look at this, right? They created liquidity. They dropped below and traded above. So nothing here, nothing here, nothing here. Overall, see how like none of this, all of this ties into this bigger pool of money, right? So all of this, we could just make like one big, I don't know why that doesn't let me make it bigger anymore. I might have messed up my settings. But overall, that's a big pool of money. So I like everything to the downside. All we'd want to do is kind of find a place to reposition ourselves in the sell position. Now, again, if you don't want to miss a trade, maybe find a sell position off this candle. If we trade above that candle, I would let it trade through all of this money and come trade up into this imbalance. So again, as you see with most of my trades, I'm going to have kind of two different areas. Either you're going to take, maybe a earlier setup like this, stop above the wick, targeting something like that. Or if you were to hit this at the wrong time, or you want to wait, or maybe they don't have enough liquidity in the markets, or maybe they don't reject fast enough, I would want the market to kind of trade up to the upside. But, again, this is also playing into the bullishness of GBP as well here at Euro GBP. So cool. Awesome. Any more questions for you guys? We will probably be ending it off here. We went through a lot of pairs here, hour and a half of market structure. So, again, like I say on Mondays, I really want to wait for the market to open, just like last week. What did GU do right after we got off of the webinar? GU decided to go trade into that. So again, like we were here on the webinar last week. We were here. I said, we're either going to look for this imbalance or we're going to look for this candle. What happened? We tagged the imbalance and then we tagged the candle, right? What happened with golds last week? We were talking about, hey, we're either going to come tag this candle or we're going to come tag this candle. What happened? We reached this candle at the wrong time. We entered this candle really quickly in Asian session, right? So that's not something that you really want to, you would have wanted to look at. We traded down and then never really got to anything else, right? What happened with UCAD? We said we're either going to wait for this candle or lower prices, and we came up and tagged that candle. So, again, on Sundays, I'm just pointing out certain candles, certain imbalances that we want to look for. I'll touch on US 30 quick. I got a long way before I write a book, but again, that could be something, very fun in the meantime. I got some mentors that are writing some books right now. So, we'll be on the lookout for that. US 30. I used to trade US 30 a lot during Asian session. And again, like I don't share a lot of what I do because again, I'm still pretty new to this stuff, guys, too. Like, you got to remember, like I'm 3 years into trading. I'm just coming on a year and a half into smart money. So it's like, I'm definitely not the answer to everything. I just share because, again, some people don't get the concepts here or it's too confusing here or whatnot. So again, I just, again, the reason why YouTube, YouTube even started for me, and this is, I'll touch on this real quick. The only reason these videos are up on YouTube is so, when I had my mentorship, and I know, I kind of have my mentorship on pause at the moment. Stay tuned for stuff I'll be, stuff I'll be dropping on that. But it's like, guys, these videos that I dropped last summer, like this was just for people to come like reference, like for my traders to come reference, right? Like how to fund your account through Bitcoin, right? All these beginning to institutional concepts that were last summer, like, I mean, these are so funny to go look at now because we were so early on in our education. And this was just by accident. Like YouTube just, by accident, I ended up getting like 500 subs from a lot of this stuff here. This is even before I tried growing the channel. And then when I realized more and more people, right, guys, these are all Zoom calls, right? This wasn't purposely meant for YouTube. These were all recorded Zoom calls. And then finally, over quarantine, I decided to go ahead and, dive in a little bit. And that's why I made the confirmation checklist. And we've done price action studies and kind of gone from everything from there. But again, what I share here, on YouTube had been pure by accident. And again, like it clicks. Like I didn't share anything from my retail world because it didn't work. But as soon as I started learning institutional and helping my students learn institutional, I mean, things started clicking, right? We had people taking accounts from and having growth from So that's kind of the fun part about it and whatnot. But let me answer the question on US 30 quick and we'll go from there. For US 30, I mean, some low risk setups that I would look at, again, this is kind of some stuff that I used to do when it comes to smaller time frames. As you can see, we just effectively kind of equaled out last Friday, these highs here. So what I notice on, Asian sessions, especially on Sunday, sometimes we'll open up, we'll consolidate. Maybe they'll, and this is where like kind of smaller time frame stuff comes in. Maybe they'll create more liquidity. They'll run high. You'll see that evidence of them trading low. You might have a nice little test, or if you follow along with like ICT, this could be like some optimal trade entry stuff here, and you could run it to the downside. Where do you want to run it to the downside? You maybe want to go ahead and maybe take some profits here, take some profits here when we get into this imbalance. And then I would be looking at this last down candle, right? Look at the risk to reward that you could take on this last down candle, right? Boom, look at the open, right? Stop of about 35 points up underneath the low. And then within this mark down, they're going to create new areas to target, right? So you would kind of be targeting those. But, again, I would just wait. I literally wait from them to purge highs or purge lows. And my screen sharing just stopped. Hopefully you guys could see kind of what I was kind of doing there. But, again, I just wait for them to purge some set of highs, purge some set of lows, wait for the right time, and then pretty much be able to take it. But this is like smaller time frame work where, again, I'm not really showing a lot of you guys because it's not something that yeah, I'll be talking about it, Mo. I'll be talking about the mentorship more and more as we go on throughout the week and whatnot. But cool, awesome. Appreciate you guys. Let's go ahead and end this off. Appreciate you guys for being here. You can catch the recording here in a couple hours on YouTube. I'll have it up. Now that it's 3:36, I might take a little bit longer. So maybe around 7, 8 p.m. my time, Eastern time, that'll have it up. But other than that, hope you guys gained some insight. Let's continue to live bullish this week. Make sure to, look at Forex Factory, know what your fundamentals are. Go study that Wyckoff website that I shared at the beginning, and we'll be back with a midweek review as to how these setups pretty much, ended up this week. So thanks, bro. Thanks, bro. Thanks, bro. Beautiful. Appreciate you guys. Appreciate you guys. All right, let's get it. Let's live bullish. Make sure to smash that like button. Let's go.